Hello students, welcome back to the departmental accounts. Students, today we are going to solve some 3 problems in case of departmental accounts. So we have with us, before us, the 12th question. From the following balances of Ravi, prepare departmental trading and PL account for the year ended December 18. So we have this opening stock of A and B, purchases of A and B, sales of A and B. So these 3 items to be recorded in the trading account, opening stock to be recorded in the debit side, purchases to be recorded in the debit side, sales to be recorded in the credit side. ತದನಂತರ ನಮ್ಮ ಮುಂದೆ ಇರುವಂತದ್ದು ಜನರಲ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಬಂದು 75,000 ಎರಡು ಡಿಪಾರ್ಟ್ಮೆಂಟ್ಗೂ ಸೇರಿ ಏನು ಹೇಳಿಲ್ಲ, ಹಾಗಾಗಿ 75,000ನ ಎರಡು ಡಿಪಾರ್ಟ್ಮೆಂಟ್ಗೂ ಸಮವಾಗಿ ಹಂಚ್ಕೊಳ್ಳಿ. So general expenses incurred for both the departments were 75,000. No information about it, so distribute in equal ratio 1:1. And other information we have: number 1, closing stock of department A 27,000. So A the closing stock bandu 27,000 to be recorded in trading account. Includes goods received from B for rupees 9,000. So 77,000 ಒಳಗೆ ಗೂಡ್ಸ್ ಇಂದ ಬಂದಿರುವಂತ 9,000 ಟ್ರಾನ್ಸ್ಫರ್ ಇದ್ರ ಒಳಗೆ ಇದೆ. Closing stock of department B was 30,000. So this 30,000 includes goods received from department A for 8,000. So it's already included. Then we have opening stock of department A and B 3,000 and 2,000 received from department B and A respectively. So these are called interdepartmental transfers, which is already included in the respective opening stock and closing stock of the departments. Then the gross profit is uniform from year to year. It's just only an information given, so it doesn't have any impact in our answer. So departmental trading and PL account ನಮ್ಮ ಮುಂದೆ ಇದೆ. Buy sales given separately 6,40,000 and 9,60,000, total 16 lakh. Then we record buy sale closing stock 27,000 for A and 30,000 for B, and total is 57,000. This also includes interdepartmental transfers. Debit side we have 2 opening stock 25,000, 20,000 for A and B with a total of 45,000. 2 purchases of A and B, and then we get gross profit. So A gets a gross profit of 192,000. B also gets a profit of 192,000 with a total gross profit of 3,84,000. So gross profit percentage is 30% and 20%. Not important for our calculation. So it's just only a simple calculation being made, doesn't have any impact on our calculation. ನಮ್ಮ ಲೆಕ್ಕಾಚಾರಕ್ಕೆ ಗ್ರಾಸ್ ಪ್ರಾಫಿಟ್ ಶೇಕಡ ಬೇಕಾಗಿಲ್ಲ, ಸುಮ್ಮನೆ ಅದು ಲೆಕ್ಕಕ್ಕೋಸ್ಕರ ಹಾಕಿರೋ, ಸುಮ್ಮನೆ ಹೆಸರುಗೋಸ್ಕರ ಹಾಕಿರುವಂಥದ್ದು. Then we have this trading and PL account. General expenses ಮಾಹಿತಿ ಇಲ್ಲ, distributed equally 1:1. So thereby you get a net profit of A 154,500, B 154,500 with a total of 3,09,000. So 13th question, students. It is similar to that of 12th, which we did just now. The following balances are extracted from the books of Vikram. You are required to prepare departmental trading account and PL account for the year ending 31/12/18 after adjusting unrealized departmental profit if needed. Unrealized profit is nothing but stock reserve. So we have opening stock of AB, purchases of AB, sales of AB. General expenses incurred for both the departments were 1,25,000, and you are supplied with the following information. So students, distribute general expenses in the ratio of equal. That's 1:1. Distribute it equally because no information is given. Closing stock of Department A 1 lakh rupees including goods received from Department B for rupees 20,000 at cost of Department A. So that means 20,000 is a closing stock of Department A received from Department B. Though they have given the word at cost, we need to calculate unrealized profit because on the top introduction they are asking you to adjust unrealized profit if any. So taking this as a cue, taking this as a assumption, we calculate unrealized profit. That's called stock reserve. So 20,000, I repeat 20,000 should be adjusted regarding unrealized profit. Closing stock of Department B 2 lakh including goods received from Department A for rupees 30,000 at cost of Department B. So B's closing stock is 2 lakh. In that 30,000 is received from A. So calculate stock reserve for Department B on 30,000. Then opening stock of Department A and B includes goods of the value rupees 10,000 and 15,000 taken from Department B and A respectively at cost of the transfer department. So the GP is uniform from year to year. Students, it is a very similar problem. So kindly work it out. So this is the answer for the 13th one. So we have buy sales given in the question, 10 lakh and 15 lakh for A and B. Closing stock also given in the question, 1 lakh for A and 2 lakh for B. Debit side we have two opening stock of A 50,000 and B 40,000. Two purchases 6 lakh 50,000 and 9 lakh 10,000. So we get a gross profit of 4 lakh and 7 lakh 50,000. So we get total gross profit of 11 lakh 50,000. And opening stock and closing stock also includes interdepartmental transfers from A to B and B to A. So since it's already included, no need to go for such kind of adjustments. Then we have two general expenses to be distributed to A and B equally. So A gets 62,500 and B gets 62,500. Total of 1,25,000. So thereby you get net profit for A. So A gets a net profit of 3,37,500. Similarly, B also gets a net profit of 6,87,500. Okay, let us look into question number 14. So students, let us work out the 14th problem today. Dr. Jaiganesh, who is running a departmental store, has supplied you with the following ledger balance. Prepare PL account and the balance sheet for the year ended 31/12/18. So we have opening stock 2,000 and 4,000. Purchases of A 10,000 and B 16,000. However, they have given you the materials purchased in terms of kgs. A have purchased for 6,000 kgs, B have purchased for 18,000 kg. So why they have given you the quantity of material purchased is in order to find out the purchase ratio. So here itself you can get the purchase ratio, students. 6 ones are, 6 threes are. So the purchase ratio is 1:3. If kg is not given, you can take amount as ratio. If kgs are given, then you need to take kgs as ratio. Purchases A 6,000 kg, B purchases 18,000 kg. So simplify, 6 ones are 6, 6 threes are 18. So therefore the purchase ratio will be 1:3. Wages given separately, sales given separately. Rent and tax, students, you need to distribute on the basis of space occupied given in adjustment. Salary distribute in sales ratio. Student sales ratio will be 2:3. 20,000 and 30,000, 2:3. Carriage inward to be distributed in purchase ratio. It's a transport expense on goods purchased. Advertisement expenses to be distributed on the basis of sales ratio. Discount in bracket credit means it is called discount received to be distributed in purchase ratio. Furniture and fixtures will come in balance sheet, debtor balance sheet, investment balance sheet, creditor balance sheet, capital balance sheet, drawings balance sheet, bank and cash is an asset will come in balance sheet. Now let us look into adjustment, students. Prepare departmental trading account and PL account for the year ended December 18 and the balance sheet after taking into consideration the following adjustments. The closing stock on 31/12/18. A's closing stock 2000, B's closing stock 4000. So it will come in trading account and balance sheet. Internal transfer of goods from A to B 200 at cost. Since the word at cost is given, you need not calculate unrealized profit. But in the previous problem we calculated because specifically they asked you to calculate adjust unrealized profit if any. So here in this question there is no unrealized profit, there is no stock reserve. So internal transfer of goods from A to B 200. So A is a giver, B is a receiver. So B debit, A credit. A giver, B receiver. So B department debit, A department credit. Services rendered by department B to A included in wages of rupees 40. So 40 is a services given by B to A. B is a giver, A is a receiver. So for B it will be credit, for A it will be debit. Space occupied by department A 200 square feet and B 400 square feet. So this is an information that it will help you to distribute the rent 1:2. That is 2 ones are 2, 2 twos are 4. So rent should be distributed in 1:2. Other expenses, other incomes and expenses should be appropriated on the basis which you think most. That means as we discussed, advertisement, salary, all this should be distributed in sales ratio. Carriage inward should be distributed in purchase ratio. Discount received, which is an income, credit bracket is given, is an income to be distributed in purchase ratio. Let us work out the solutions. So opening stock take as it is, purchases take as it is, wages take as it is. CIW stands for carriage inward. The carriage inward in the question, students, is 480. Distribute in purchase ratio 1:3. So if we should distribute 480 into 1:3, you get 120, 360. Next, wages, that is services rendered by B to A. As I explained you in the adjustment, B is a giver, A is a receiver. So A receiver debit, B giver credit. So A 40 debit, B 40 credit. Next we have transfer of goods from A to B. B is a receiver debit 200, A is a receiver, sorry students, B is a receiver 200 debit, A is a giver, credit the giver 200. So for A it comes in credit, for B it comes in debit. Then sales as it is you take in the question. Transfer I have said, receiving department debit, giving department credit. Similarly services 40, then closing stock, total the trading account, you get GP. Bring down the GP, discount received 360 to be distributed in purchase ratio because you receive discount at the time of purchase. So 360 into 1:3. Rent distributed in space occupied 1:2. Salary advertisement distributed in sales ratio, and then you get net profit. Coming to balance sheet, students. So capital 16,000 contributed by the proprietor. Add net profit 16,880. Total net profit 16,880 of A and B together. less drawings amount drawn for personal use, outer column 32,480. Creditor is a liability 800. Take all assets, furniture, data, investment, bank and closing stock of both the departments. A 2000, B 4000. So you get 6000. So thus the balance sheet tallies. So students kindly work out.